Live from Music City, this is your captain of the charts, sergeant of the stochastics, master of the moving averages, your lovable, loud, lucid, rhythmically inclined trading mastermind, Jeremy Alexander Newsom, with yet another impossibly free, visually delicious, and mentally nutritious real-life stock review. Ladies and gentlemen, boys and girls from around the world, how are each and every one of you doing? Sam, thanks so much for sending me that intro. I appreciate it. I loved it. I'm loving this intro stuff, guys. You're doing phenomenal. Keep up the good work. Only 2 stock reviews left in the month of April. May is going to be a health and wellness month here at Real Life Trading, so keep your eyes peeled for some really cool challenges there. Let's look at the general market today. So the market's responding pretty well to the French elections. We were up 1% at open. Now, this wick that you are seeing right here on your screen, I do not believe it is an adequate wick, which simply means that the price is a little off somehow. It's there on Thinkorswim also. I think it'll get updated though, because if you hop over here to the 5-minute chart, you'll notice a bunch of random lower shadows. I don't really think that data is accurate, so it'll probably get updated. But anyway, pretty much what we're looking at is a huge gap. Now, on Friday, there were a few traders who we got triggered into a 235 April 28th. That was this Friday's expirations, call options, and those triggered on Friday for $1.75 and some change. So Adrian, let's bring over the Slack group here. So you'll notice Adrian sold the 235 calls for $2.50. Entry was $1.75, so 42.5% ROI. Not too shabby for 3 days. Mr. Lee, I would have to agree with that statement. Congratulations. So anyway, SPY, we got a chance to lock in some games there. That was fun. We also still have this 228, 227 bull put spread. So when this lower shadow goes away, pretty much what we're going to be left with is kind of what we've been dealing with for the last few days. Higher lows, lower highs, and potentially and more than likely a breakout at some point higher to go with the overall trend, which is, of course, bullish. Here's the Qs, and the Qs today made a new all-time high with a very strong, or what looks to me like a very strong gap, because it occurred on a Monday, right? Gapping up, so you got a gap on a daily and a weekly chart. It is a retest gap on the weekly, and so we actually finally hit my Qs target for 2017, which was 133.90 and some change. So we finally got there. What does that mean? Well, it simply means that I think we can easily go higher, but at this point with this giant retest gap on the weekly chart, it would make sense and it would be comfortable if the Qs, they do retest and then they bounce. That's simply all that it means, is likely it would pull into this gap, we bounce, and it'll be a buying opportunity potentially off of the 50 exponential at some point. But the trend, at least at this point, in my opinion, still remains bullish on the markets. So if you're long, that's the way to be right now. All the other market ETFs, pretty much the same. IWM going bananas, up 1.2% right now. The Dow Jones ETF also up nicely. All these gaps are pretty strong, but today's candle, very, very weak and meek. Weak and meek because it's a high wave candle, you'll notice, with the market closing about 60 seconds. Just simply, that's investors trying to digest what in the heck to do with being up 1% at open. So pretty strong gap. I personally think this gap on the markets does fill over the next few days, and then from there we probably bounce. That's my guess. That's what I'll be looking for, and that's what I'll be expecting to play. So that's the market close. All right, awesome. Well, we do have some good requests and some things to look at. First on the list, you'll notice OCLR was requested, and OCLR. Let's go over here to a weekly chart. Not a stock I look at all that often. Just zooming out here on a weekly time frame. Oh, okay. So we have a lot of data back in 2010, 2011. All right. Well, what I can say about this one, at least in my personal opinion, is it is looks like it's a great buy low, sell high location. So you'll notice on OCLR, we've traded to a resistance that we've hit before. Check that out. Back in 2008, that was the high, and then back just a few weeks ago. And then we trade down to the support, about $1 or so in 2009. Went bananas, did it all over again, went crazy. So from here, what do I think? I think this 837 is a pretty good support, and it makes sense that it's a distribution because this was a huge bullish run for the last 2 years. So likely a distribution phase coming in here, something like that, potentially, right? Some ups and downs. So at this point on OCLR, if we go over here to the daily chart, it does look like a pretty good buying opportunity. You got a nice one white soldier candle on Friday, and we have not breached that high. So if you're looking at playing OCLR bullish, I think that makes the most sense. Here's gold, ticker symbol GLD. I wonder where the gold's at. Show me the gold. We had a interesting little gap down, but on gold and the dollar index and silver, we were actually down while the market was up, but we did kind of rally overall. Here's your weekly charts on gold, and here's your long-term moving averages. Pretty much the best thing to keep in mind at this point is, in my opinion, we're in some kind of ginormous triangle-looking thing. So you got some higher lows from way back when, you got some lower highs, and we've just kind of been chopping around. So likely, we're probably going to continue more bullish to neutral on gold, at least short term. I don't see anything to really change that. Here's the daily charts, and here's your exponential moving averages. You know, you're above the moving averages. Looks like we're bouncing off the 20. Here's the weekly on gold, and we're kind of above that. So realistically, all looks good. I know my good buddy Mark was in some shares, and he had a covered call that expired Friday. Great job, Mark. At this point, next target, it's going to be a slow methodical to get there, but probably 125 and some change. I don't have any position on GLD myself, but those traders who do just simply have shares and are doing covered calls. Google, G-O-O-G-L, woo-wee, look at that. Gap action. Beautiful bullish gap and go. Today you had a nice inside day candle on Friday, meaning that the total day's range, open, high, low, and close, were within the low and the high of the previous day. So inside day on Friday, beautiful bullish gap and go today, new all-time highs. So let's walk you through some analysis really quick here on Google. Interesting thing, last time leading up to earnings, we had a bullish gap and go that made a new all-time high. We ran for a few days, earnings came out, and we traded lower and bounced. Weird. Then we got another bullish gap and go right here, leading into earnings, making a new all-time high. What do we do from here? We probably run up higher, which would be great for some option traders. And then earnings will be here. What's going to happen? Not entirely sure, but what I can say is I'm looking for something like this that happened previously, where we trade back and then dip. Why would that happen? Well, you got a nice little double bottom right here. And with this little neckline occurring, if it does pull back, simply to say, I'm looking to buy the dip, right? Real traders, at least real life professional traders, you always plan for the future. The farther out you plan, the better you can anticipate the analysis, because you're going to be planning it. And if you fail to plan, you plan to fail, right? Forget who said that, but somewhat important. Here's HLF, excited about the gap up in the bullish move today, because we do have a lot of bullish swing trades out there. So let me pull up HLF. This is Herbalife, and this was the original swing trade that we had on it. This is the hourly chart. So 58.67 was the limit buy by 57.38. So let's hop over here to the chart now on the daily, and you'll kind of see that setup. So here was the setup, and really it was just all based on this breakout. So you had this retest gap right here, and you'll notice we traded up, we traded down, and then we were trading sideways. So when that breakout occurred, I figured that this gap would likely fill, right? And you had 4 or 5 white candles in a row, so I went with the limit buy, and we filled the very, very next day, which was the 11th of April. Came down to the moving average. You got a beautiful one white soldier, new white soldier candle on the 17th. That's when we thought that the trade would likely work. And then we hit our target to exit all at 61.67 today. So Herbalife working out, looking good, happy about that. Goldman Sachs, definitely stock to keep an eye on. Looks like a very, very nice bullish gap and go off of a support. In fact, it's actually a double gap action. You have 2 gaps in here, one right here, one right here. And which gap's going to be the strongest? Going to be interesting to find out. That's what the battle is all about. But here's your long-term moving averages. And I have checked for my credit spread fans. There's no money, unfortunately, in a credit spread down here for May or June. I say no money. You can get 10% premium for June. But anyway, it's interesting to see what happens on Goldman Sachs. A lot of traders looking at this potentially being a head and shoulders pattern. I'm not going to discount that specifically, but what I will say is this would be the neckline if you're a purist, and it needs to close below there. So with this bullish gap and go, I'll put it this way. I'm not specifically bearish on Goldman Sachs at this point. If you're looking at trading it, you probably just keep an eye out for a bullish position and see what can happen from there. Last but not least, this was requested, ticker symbol FCAU and FCAU, Fiat Chrysler Automobiles. Here's your weekly chart. on FCAU, and pretty much what the stock's been doing is just chopping around for a while. The interesting, most important takeaway is that this resistance on fiat, this $11.21 resistance, we were there before back in March 2015. It's a very strong resistance price. The all-time high on fiat is just a little bit above there, which I believe, let me figure that out, just changing my mouse. All-time high, 1163. So we're at 1056 right now. It's only a real dollar to go to get back to that all-time high. Looking at it, it was a nice pullback. It kind of appears to be some type of 1, 2, 3, 4, 5, right? With wave 1 in June, wave 2, then here's your wave 3. Pretty much all the last few months, and then last few weeks we got that wave 4. So then a wave 5 could come in, and we absolutely could make higher highs on fiat. I did have one trader who was looking at buying it around 852 on this recent retracement, just never quite got down to that level for him. So that's pretty much my thoughts. More or less, it's at a resistance right now. If you're looking at buying it, look to buy the dip rather than buying right at a resistance. And of course, if it breaks above the all-time high, then simply look to buy the dip into 1052 and take it from there. That's my thoughts on Fiat Chrysler Automobiles. Ladies and gentlemen, there's a lot of major gaps happening this week in the markets. United States Steel, we were able to snag 2Rs on U.S. Steel. So Latoya set that trade up this morning thanks to a Stephen King shout out. And here's the daily chart on U.S. Steel. So you had a little bit of a small, very hard to see, honestly, very small little bearish candle on Friday, and you gapped up right above both of the wicks. So very, very small gap on it. And here's pretty much how they played it on the 5-minute chart. Pretty simple. Stock pulled back and started forming this double bottom kind of feel right here. You'll notice I look at these double bottoms a lot. Kind of a double bottom feel right there. Entry was above there with a stop below there. That was pretty much it. Target was the high of the day. So we nailed the target to the penny, 31.62 for 2Rs. So congratulations. Hop over here back to Slack just so you guys can see I'm just not totally making this up. But here's Stephen King saying SPY popping bullish. This could be what X needs to hit the target. And about 20 minutes later, boom, there's the target on US Steel. Well done, everybody. Jesse wrecked it. John wrecked it. A lot of traders did very well on US Steel. So anyway, congrats. Earnings on US Steel right around the corner. A lot of traders in some put sales. I mean, they're looking at buying low, selling high. A lot of traders here. Adrian got one at 26. We got one at 29. I think Niels has a March week 2 at 27. Going to be interesting to see, but US Steel did trade right down to the 200 and is bouncing. I'm keeping a close eye on it because iron ore going to be some big sway in determining how US Steel, Cliffs Natural Resources, AKS, Nucor Energy, all those are going to play out over the next few days and weeks. Watching them very, very closely. Folks, thanks so much for tuning in to your Monday Real Life Stock Review. Remember, I do take requests. If you want to email them to me, jeremy@reallifetraining.com, or you can post them in the YouTube comment section below. You can also message me on Twitter @NewsandNuggets. We're also on Instagram. We're also on Facebook. I'm also on LinkedIn. I do the whole social media thing. Ladies and gentlemen, our mission at Real Life Trading is to enrich lives. You are amazing. Thanks for tuning in. If you have any questions, let me know. I'll see you on Wednesday. And until then, remember, love life, live life, and trade it. Bye.